Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The S&P 500 slides into a correction, bringing the benchmark's three-week sell-off past 10%. But futures point to a rebound on signs the U.S. will avert a government shutdown. Putin's pushback. Russia's president warns any truce should lead to a long-term resolution of the war, saying there are issues he wants to discuss with the United States. Plus, data center dominance. Bloomberg learns a top Emirati official is to lobby Washington for more top-end chips as the UAE looks to become a regional leader in artificial intelligence. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Another risk-off day yesterday, dominated by all of those tariff headlines that came through. This time, the Trump administration floating the prospect of a 200% tariff rate on some European products, including champagne and other alcoholic products as well. Needless to say, it didn't go down well with the market. We saw a negative close once again for both the S&P and the Nasdaq, and of course, some of those European markets as well. This tit-for-tat really does seem to be escalating and getting worse as the days go on. But today, there's actually quite a bit of green on the board. You can see behind me, S&P futures actually leaning up, down, up 0.8%. And this perhaps on the news coming out of Washington, and that a shutdown seems to have been momentarily averted. So if there were any risk premium into these markets about the potential for seeing a shutdown this weekend, that has actually been brushed aside. So S&P futures are positive. We got the euro slipping a little bit. So contrary to the price action the last couple of weeks, those headlines that came through yesterday, and specifically the language that President Trump is using to describe the EU has not been positive for the euro currency. So we're dropping just marginally here, about 6 basis points lower on the day. Gold, once again, a record high in yesterday's session. So all of this risk-off concerns about geopolitics, the flaring up of tensions between the U.S. and ironically, some of its closest allies has actually helped the bullion. So it is very close to $3,000 now. And then Brent, we're seeing some support come through this morning, up 0.6%. Of note, the IEA forecast that came through yesterday suggesting there will be a surplus to the market this year. But on the flip side, the U.S. administration has applied further sanctions on Iran, targeting specifically the Iranian oil minister, in addition to a further potential tightening of sanctions on Russia if they don't sign on to the ceasefire. So still lots of geopolitics at play there. Let's flip the board, though, because I do just want to point out the price action in the Trump tariff losers basket. So this is a basket that we've compiled together, which is essentially a basket of the companies that have or are the most exposed to the tariffs that have been announced in steel, aluminium, and other sectors too. And here you can see that it is trading at the lowest level since Trump got inaugurated. That basket is down 20%. So any company that is seen to be in the eye of the tariff storm has been really taken a beating, especially in the last couple of weeks. So you can see that from that basket. All right, let's also check in on how markets in Asia are faring this morning. Avril Hong is in our Singapore studio. And Avril, just run us through what you're seeing.
Yeah, we're seeing Asia stocks running higher along with U.S. futures as the risk of a U.S. government shutdown eases. The outperformance today is really coming from Chinese stocks. There's a lot of policy optimism with finance, commerce ministry, government body officials set for a briefing on Monday, and they could give us more details on measures to boost consumption. So the Hang Seng is actually climbing by the most in more than a week, and today it could be the day where the region's benchmark finally snaps its losing streak after 5 sessions of declines. Aside from that, we're also seeing the weakness in the yen today, at least, helping to boost Japanese equities. We did get some of the demand for safe havens easing off, and then traders also, of course, waiting out for the results of the first tally of wage negotiations today from Rengo, which is the largest labor union federation in the country. But then the question remains, how sustainable is any stock rebound amid the tariff back and forth and retaliatory action as well?
Yep, and let's not forget Bank of Japan meeting is coming up next week, so something else to keep on the radar. Avril Hong in Singapore, thank you so much. Well, on to the top story. It is tariffs related once again. President Trump is threatening to impose a 200% tariff on European alcohol. That's after the European Union's plan to tax American whiskey exports. The bloc's top diplomat says they don't want a trade war, but will not hesitate to defend their interests.
We are not interested in trade wars. There are no winners in trade wars. Who is laughing on the side or looking at the side is China, who is really benefiting from, U.S. having a trade war with Europe. But it is also clear that if these tariffs are put on us, then we are also defending our interests.
Well, for more on this, Bloomberg's news desk editor Jill Desis joins us now. Jill, I think it's fair to say that President Trump and the administration did not take kindly to the Europeans' response to those steel and aluminium tariffs. And here we are. The Trump administration is threatening tariffs of up to 200% on alcoholic beverages coming through from Europe. What do we know about whether or not this time around it actually will be implemented?
Yes, that's right, Jemana. Actually, it was Trump's Commerce Secretary Howard Lutnick who was saying that, part of the reason why Trump came up with, this potential retaliatory effort is because he's annoyed by the EU's response to this. Actually, Lutnick brought up some of the nations that actually haven't yet responded with retaliatory tariffs, pointing to places like the UK and Mexico, which say they're still kind of trying to figure out negotiations. They don't want to respond with anything yet, is kind of pointing them up as good models of how to behave in this trade war. That's certainly the Trump administration's perspective if they're not slapping back with new tariffs. But yes, ultimately, you look at what's happening with Europe in particular, Canada as well, these nations that are in the EU's case, this bloc that has really kind of come back with pretty immense, a pretty immense response here, actually matching some of those initial U.S. tariffs like for like. You look at the EU considering, increasing those tariffs on American whiskey products. Obviously, Trump's response there. I will say, we've heard from some EU officials, we even heard from Christine Lagarde of the ECB, really kind of pointing out the fact that none of this actually goes into effect until the beginning of April. So they are kind of hoping for a little bit of time to potentially negotiate. Nobody, from the EU's perspective, is saying nobody really wants a trade war here. But obviously, the door is still open there. And it does seem like all we're getting, at least so far, are these just escalating tariffs kind of building on each other. So we'll have to see if any of that is actually resolved by the time some of this goes into effect.
Yeah, the thing is, you have to assume that there is some sort of method to the madness and that there's a goal out of imposing all of these tariffs, either because the Trump administration wants to make a deal or because they're looking to raise revenue somehow to fund other programs, say the tax cut extensions. Assuming they do actually want to make a deal, what would a deal with the EU look like, Jill?
Well, I think that's kind of an open question here. Yes. And yes, ultimately, look, the Trump strategy, whether it is, involved in sort of getting, some of those alternative revenue sources to fund those continuations of those tax cuts, if that comes into effect, it's certainly part of it. But yes, Trump's, sort of MO, he certainly handled a lot of situations like this before where he goes in really aggressive, goes in really strong, kind of runs up the risk of this type of trade war and then ultimately tries to cut a deal. From Trump's perspective, he's really saying that he wants, he's saying that he wants these relationships to be fair. He feels like the United States has been treated, often in his words, very unfairly by their trade relationships with other countries. We've seen Trump during his first administration try to, renegotiate trade deals. He ripped up NAFTA to try to renegotiate, for example, his own trade deal with Canada and Mexico. Obviously, he entered his second term and then immediately turned that on its head and relaunched trade wars with those neighboring partners. But, perhaps there's something in there that Trump's ultimately looking for in terms of, trying to find those deals that that ultimately he thinks are going to be favorable to the United States, though obviously the big open question is whether he's actually going to be able to do that this time around.
Yeah, Bloomberg's Jill Desis in Hong Kong. Thank you. Brilliant reporting as ever. Now, U.S. Senate Democratic leader Chuck Schumer is dropping his threat to block a Republican spending bill. The move opens the way to avoid a U.S. government shutdown on Saturday. The two parties have been engaged in a standoff over the Democrats' insistence that a spending package includes some restraints on Elon Musk's federal cost-cutting crusade. A San Francisco federal judge has ordered the Trump administration to rehire thousands of the government's newest employees who were terminated in February. The court found the Office of Personnel Management's order to fire probationary employees was illegal. The administration says it will appeal the ruling. And Bloomberg has learned a top Emirati official plans to visit Washington to press for easier access to American technology and discuss investment in the U.S. Sheikh Tahnoon bin Zayed Al Nahyan, the UAE's national security advisor, is slated to meet with Trump cabinet officials as soon as next week. And top of mind for the UAE is its ability to buy cutting-edge chips from the likes of NVIDIA as it vies to become a regional AI powerhouse. While Asian equities and U.S. equity index futures rose on Friday as a stopgap funding bill looks set to pass, avoiding a U.S. government shutdown, as we were just talking about. Joining us to discuss this and more is Hani Kablawi, Head of International at BNY. I actually want to start with all of the noise around tariffs, the potential implementation. There's so much news coming through. It's thick and fast, potential retaliations as well. How is this uncertainty vis-a-vis what is going to happen with tariffs translating into the customers and your clients' appetite to trade in this environment?
Yeah, great to be with you, Jumana. There is definitely a lot of noise fueling uncertainty, and that is resulting in a lot of volatility, but also rotations out of U.S. markets, which have been the recipient of the U.S. exceptionalism trade over the past 8 quarters or so. So this rotation over the past 3 to 4 weeks is really potentially early days still, and it all is dependent on what we're calling the policy put. So how much short-term pain is the administration willing to take to achieve the long-term gains that you talk about?
Do you think the Trump administration is losing the support of the business community? I mean, we were both in Davos a couple of months ago, and everyone was really excited and looking forward to the prospects of having a pro-growth, pro-business administration come through. But if anything, the price performance has been very disappointing, and many seem to be getting a bit exasperated with the uncertainty and just clear lack of clarity about what's going to be happening.
I think the question is, where does noise start affecting sentiment, producer prices, inflation, feeding into consumer sentiment? So for now, credit yields are still quite tight. The market is not expecting a recession, and corporate earnings continue to be quite healthy. So support is still there. But I think through the noise, we have to look at real impact of tariffs, the real tariffs that actually do get implemented. We have to look at credit yields, and we look at some of the DOGE impacts and whether they do cut spending enough that actually that feeds into consumer sentiment further down the line. I mean, those are the 3 things that are more real at an economic level in the U.S., and that's what we look for.
I hear more and more people beginning to talk about the recession, a potential for a U.S. recession again. Do you think that it could be headed in that direction?
We're not seeing it yet. Only in the past couple of days have credit yields widened again, but it's still not foretelling a recession.
Yeah. So the other big theme of the last couple of weeks is all of this optimism surrounding the potential suspension of the German debt brake. A lot of excitement about Europe and specifically Germany opening up the purses towards infrastructure spending and defense spending. Are you seeing that translate into client activity?
We are. So the big data models, the flow models that we track at BNY, $52 trillion worth of assets under custody and administration, 25% of the world's investable assets. We are seeing plenty of rotation back into Europe. Interestingly, not into China. So it looks like the Chinese investments and the Hang Seng upswing is primarily driven by Asian investors as opposed to investors from Europe and the U.S. But it is true that in Europe we're seeing a lot of rotation back into Europe, fueled by some of the news that's coming out of Germany and out of the European Commission as well.
Yeah, and I know you've also been in the region, this GCC region, and whether the governments like it or not, people still associate the region very closely to the price of oil, and the price of oil has been quite subdued as of late. How is that affecting sentiment right now?
February inflows into the region across all 6 Gulf nations, as well as Jordan, Egypt, Turkey, have actually been fairly positive to quite positive. So Jordanian dinar, Kuwaiti dinar were particularly good performers, but the UAE dirham and the Saudi riyal have also benefited from inflows. It is an interesting one. Your point is the right one. Oil prices potentially under pressure, an expectation of a peace dividend to oil prices and its impact on the region here. But there does seem to be a little bit of a break between expectations on oil prices and inflows into the region.
Yeah, and just quickly, because you bring it up, the peace dividend, Russia-Ukraine ceasefire, do you get a sense that people are actually beginning to position for what may happen the day after that ceasefire actually comes into place, or is it too soon?
There is talk, but no action at this point in time. So I can't really speak to real events taking place that are in anticipation of that happening.
Yeah. Hani, thank you so much for coming on the show today. That was Hani Kablawi, Head of International at BNY. Now, still ahead, is Dubai still the preferred safe haven for real estate investors? We ask Deloitte's Dunia Joulani. But up next, why President Putin has stopped short of endorsing an immediate ceasefire in Ukraine. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. President Putin says he supports the idea of the U.S. brokered Ukraine truce deal, but wants to discuss the details with President Trump. But the U.S. president remains optimistic about the possibility of a ceasefire.
Yeah, I'd love to meet with him or talk to him, but we have to get it over with fast. If we get a peace treaty, a ceasefire treaty, I think that leads to peace. That's going to really lead to peace. I don't think anyone wants to go back. They've been doing this for a long time, and it's vicious and violent. And I think if President Putin agrees and does a ceasefire, I think we're going to be in very good shape to get it done.
Meanwhile, the U.S. has tightened sanctions on Russia by restricting payments for energy. So joining us now is Bloomberg's East Asia government editor, John Herskovitz. So let us just start with the comments from President Putin yesterday, seemingly open to a ceasefire so long as it also ties into a longer-term peace arrangement. So what do we know about what President Putin is looking for?
Yeah, I think that part of these comments are directed towards President Trump and the Trump administration, in that Putin wants to keep them on good terms, and that's why he's amenable to the idea of being open to a ceasefire. But there's just a great deal of doubt about what he actually wants, because Putin said that he wants to see this head towards a long-term cessation of the war. President Zelensky just showed a great deal of skepticism to what Putin said. And Putin has indicated, and Bloomberg's talked to Western European security officials who think that Putin is going to make maximalist demands to end the war. This means Ukraine can't join NATO, Russia keeps the territory it seized, no European peacekeepers, and a new election in Ukraine. So on that long-term goal, I think Putin has stayed the same. And also for the ceasefire, we're seeing indications that Putin is going to make very harsh demands, like no flow of weapons into Ukraine, that would make it very difficult for Ukraine to resume fighting once the ceasefire has ended.
What sort of pressure or leverage does the U.S. have right now over Russia?
Well, we've seen the U.S. indicate that it wants to put some pressure on Russia. Treasury Secretary Bessent said that the U.S. is willing to apply pressure to both sides. And we had kind of a ramping up or a tightening of sanctions with Russia with this licensing agreement for energy payments, which expired. What this does, it makes it more difficult for foreign currency to be used to pay for Russia's energy. Bloomberg spoke to a former State Department official who said that this is going to gum up the works for payments. The exact extent to how much this will affect the situation remains to be seen. So we have that on one end, and we also have Trump showing that he sees the Putin comments as being positive, that he sees these as constructive. What the U.S. reaction will be, if it's actually going to ramp up pressure on Russia, is another matter. But the words are there. We have this energy license payment move that took place, which ramps up the pressure a little bit. Over the long term, we're not really sure what's going to happen in terms of U.S. pressure on Russia.
Yeah, very clear. Well, let's see what happens over the coming days. President Putin clearly wants to have a phone call with President Trump. So let's see. Bloomberg's East Asia government editor, John Herskowitz, thank you. Well, coming up, is Dubai still the preferred safe haven for real estate investors? We asked Deloitte's Dunia Joulani. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Dubai. Kuwait has approved a draft decree that paves the way for the nation's first debt sale in 8 years. Bloomberg understands the original plan stipulated enabling as much as $65 billion to be raised over 50 years, but we're told the debt cap could be raised in the final draft. Kuwait's lack of a public debt bill, held up for years by political wrangling, has made it impossible for successive governments to borrow. The International Energy Agency says global oil demand is under pressure from the escalating trade war, coming at the same time as OPEC Plus is reviving output. The IEA's latest market report says a slower pace of deliveries in recent months has prompted it to trim forecasts for this year's consumption growth. It says the world faces a surplus of 600,000 barrels a day in 2025, while last week's surprise OPEC Plus announcement could add another 400,000 barrels a day. Kering has picked Demna Gvasalia, a designer who fueled sales growth at Balenciaga while courting controversy, as the new artistic director for Gucci as it looks to revive the struggling label. Under his creative leadership at Balenciaga, Demna, as he's known, has driven the brand's popularity with sneakers such as the Triple S, recognized by their exaggerated size. Demna succeeds Sabato De Sarno, who is leaving after only 2 years. And a look at equity futures. There is a lot of green on the screen, as they say. S&P futures leaning towards that 1% before the market opens up. Nasdaq 100 up a similar amount. Euro stocks also seen opening up in positive territory. And the handover from Asia has also been pretty positive as well. But coming up, the EU and South Africa are working their way towards mending relations. Details from that summit next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The S&P 500 slides into a correction, bringing the benchmark's 3-week sell-off past 10%. But futures point to a rebound on signs the U.S. will avert a government shutdown. Putin's pushback. Russia's president warns any truce should lead to a long-term resolution of the war, saying there are issues he wants to discuss with the United States. Plus, data center dominance. Bloomberg learns a top Emirati official is to lobby Washington for more top-end chips as the UAE looks to become a regional lender in artificial intelligence. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersetchi in Dubai. A bit of a pullback once again yesterday for markets. Many people are latching on to the fact that the S&P is now technically in correction territory. That is a 10% pullback from the peak that we saw back in January. So, yes, the negative momentum continued yesterday into the close. Nasdaq and S&P both seeing losses of more than 1%. But today, the mood is slightly more upbeat. We've got futures trading up 0.7% firmer, possibly on back of the news coming through from Washington and the fact that that shutdown, or at least the possibility of a shutdown, has now been averted as lawmakers came to a conclusion, or I should say a resolution, not really a conclusion. But the reaction has been positive on U.S. futures. Euro, however, seeing a little bit of downward pressure this morning, down 8 basis points, and that is on those latest tariff announcements out of Trump, suggesting that he may look to impose tariffs of up to 200% on European alcoholic products, including wine and champagne. So more downward pressure on the euro came through on the back of that. Gold, take a look at what's been happening with gold, very close to $3,000 now, back to an all-time high once again. The same themes at play: geopolitical concerns, lots of concerns about growth, and also the direction of the USD. So all of this has been playing well into the hands of gold, which is very close to making that all-time record high. Well, it is actually at the all-time record high, but very close to breaking $3,000, which is a clear psychological level. And then Brent also seeing a bit of a rebound today, up 0.6%, back above $70. Again, lots of factors at play here. On one hand, you've got the weakness of the data that's coming through, some concerns about the growth, the trajectory of the global growth environment, in addition to tariffs. And on the other, you have these new sanctions that are being imposed by the U.S. administration on Iran, and potentially some tightening of sanctions on Russia as well if they don't agree to the ceasefire deal. So all of that is playing out with the oil complex. Let's switch over. Earlier on, we were talking about the fact that this risk-off environment seems to be pretty broad-based, and you're finally beginning to see it show up in credit as well. We were speaking about that earlier with our guests from BNY. And here you can see that U.S. high yields have actually started to sell off. The past month has been the worst month for U.S. high-yield credits in over 2 years. And actually, RSI would signal that the sell-off in high-yield credit is beginning to look a little overbaked, so oversold. But it does tell you that some of the weakness in equities is beginning to creep into credit as well. So keep your eye on that. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril.
Yeah, Jumana, we're seeing Chinese equities really outperforming today, and a lot of this is the positive driver from policy optimism. There's going to be a briefing on Monday which involves finance, commerce ministry, some other government body officials as well, and the hopes are high that they will provide details on measures to boost consumption. Now, aside from that, we also had local media, Securities Daily, this is a newspaper, citing CICC data saying that the foreign fund inflows are accelerating because of AI optimism. And then if you look at the renminbi, we're seeing stability still. So, the volatility, as you know, tends to discourage stock market investors. So this is a pretty good sign. And amid the rotation into growth stocks, I just wanted to highlight this dynamic where the energy counters are actually the ones getting the hardest hit. Today, you're seeing that underperformance despite slight gains. This sub-gauge on the CSI 300 is actually the worst performer this year after 4 years of performing the best. Flip the board as we see the Hang Seng maybe headed into the weekend with gains. It follows on from 5 sessions of decline. So maybe it was due for a rebound anyway. But this trend line is also important to watch. If it keeps above what you see 2 months into the weekend, it could be a good sign for the rest of the month and indeed the rest of the quarter, Jumana.
Avril, thank you so much. Avril Hong in Singapore. Now, oil advanced after the U.S. imposed sanctions on Iran's oil minister and payments restrictions for energy in Russia. Meanwhile, the International Energy Agency says global oil demand is under pressure from the escalating trade war.
What we're seeing is it's an unusual level of uncertainty, not just on the demand side and with tariffs and trade negotiations that are changing from day to day, but we're also seeing quite a lot of uncertainty on the supply side. We're seeing sanctions on Iran and Venezuela and Russia. We're seeing continued unrest in the Middle East.
Well, joining us now is Anthony DePaula, Bloomberg's Middle East energy markets reporter. Oil, for the most part of the last couple of weeks, has been on a slide downwards. We have seen some stabilization come through in the last 24 hours. Maybe let's just start with these new announcements from the Trump administration and the fact that they're applying sanctions on the Iranian oil minister.
Yeah, that's kind of a personal shot at him in terms of the Iranian energy industry anyway. It's one of the most sanctioned industries in the world, Iran being one of the most sanctioned countries in the world ever since the 1979 revolution. So this is kind of a more personal shot. This will make it more difficult for him to travel, to go places. He'll have to talk to the lawyers about whether he can get into places. If OPEC were still going to Vienna for meetings, that would be a question. But they're not. They're doing everything online, and they are increasing, as you said. So they're looking to bring some more oil on back next month, and so that's putting some additional jitters in the market on the bearish side in terms of bringing more supply on the market. But there's all those other questions about what's going to happen about the supply and potential supply restrictions coming from the Trump administration, how those sanctions efforts actually will pan out. That's putting some jitters on the side toward the bullish side.
Yeah, and IEA seem to have revised upwards once again their estimates for surplus in the market for this year. How much is that going to be affecting the outlook for where oil trades?
Yeah, they're looking at about a 500,000 barrels a day of surplus, up to 1 million, given that OPEC increase. So they're looking at an issue of a market where demand is weakening because of those trade restrictions. So the trade restrictions potentially will hurt commerce, increase prices. That's going to hurt demand and potentially bring down the oil price. So that's the thinking in that sense. And so that weakening of demand will lead to more oil on the market, plus the OPEC barrels coming back, as I think they're really trying to get back some of that market share that they've lost over these last couple of years.
Yeah, so with this in mind, Syria Week took place in Houston. It's a gathering for some of the biggest oil names around the world, industry leaders. What was the mood there this year?
It was kind of a victory lap for the oil industry because you had the American oil execs there pretty much happy that they should be unleashed, as it were, in terms of energy policy. There was also BP coming in just after they rebalanced their strategy and really kind of relaunched a more hydrocarbon focused strategy, dialing back some of those green efforts. But what the U.S. companies are looking at is loosening of regulation, easier permitting times, but so far we haven't really seen such a push to do that drill baby drill kind of focus on the industry because of the oil price. And some of the forecasters, some of the traders, some of the more bearish shale execs were looking at oil possibly down in the 60s, down in the 50s even. Some of the traders were looking, 60, 80 range, which is pretty much where we've been the last 2 years. But others having a more negative outlook on the prices at the same time as the industry kind of takes this positive view that they've got someone's ear in Washington. So it's a little bit of a dichotomy there. We'll see that they're optimistic about how the administration is going to treat them, but will the prices really allow them to produce much more unless they get super efficient and can make money?
I get the sense that people are getting slightly more bulled up about the potential for gas production in the U.S. as to oil, given where oil prices are right now.
Yeah, gas is for sure going to be huge. Prices had come up a little bit recently, but the U.S. compared to other markets is a low-price market because of that ample supply. But we're also looking at a lot of LNG coming out of the United States, making the U.S. one of the biggest LNG producers. So we've got Total, a French company, the biggest LNG exporter, ADNOC from this region going in, saying they're really interested in getting in the U.S. So there is a lot of focus on gas there as well.
Yeah, Anthony, great to have you on for the recap. Anthony Zappaola, Bloomberg's Middle East Energy Markets reporter. Thanks so much. Now, the European Union and South Africa took another step towards mending their relationship during a summit in Cape Town. Both are currently the target of U.S. President Trump's unpredictable politics.
Today's summit focused on a number of issues. At the global level, we reaffirmed our commitment to multilateralism, to the rule of law, and to the central role that is played by the United Nations in maintaining global peace and security.
For more, Jennifer Zavazaja, our chief Africa correspondent in Johannesburg, joins us now. Jen, what more did we hear from the leaders during the summit? We spoke about it yesterday, and that it was the first such summit being held since 2018. Did we learn anything new?
Well, I think, Jumana, if you just take a look at the context that these leaders are meeting in, there was a lot for them to recommit to, right? They actually used the words that this is a new chapter in their relationship. We just heard there from President Ramaphosa talking about the commitment to multilateralism. And we heard from both him and Ursula von der Leyen saying that in the face of more nationalism and protectionist measures that we're seeing globally, this is an opportunity for them to strengthen their ties and start this new chapter. And so we continue to hear really what the relationship has been in the past between these two countries, the European Union and South Africa, and the historical nature of that, and also what that means for them moving forward. And just moving forward on that, Ursula von der Leyen really wanted to stress that she does see how the U.S. and others, she didn't specifically name Donald Trump in the U.S., but she did say as others are pulling back from South Africa, the European Union remains committed to them. And South Africa is a crucial trade partner and also a strategic partner for the European Union. So really, this was about these two groups coming back together again and really making some commitments both to work together on a multilateral front, revise some of the multilateral organizations, but then also financial commitments, which is some of what we did here also on Thursday.
So the thing is with these summits, Jennifer, leaders descend and make a lot of pledges, but how much of that is actually going to translate into commitments and into action?
Yeah, and I know you know that better than anyone, Jumana. That is always a lot of the criticism, right, with these summits, because we do hear commitments. We get page-long documents that say all of the things that they have agreed to, but what exactly is going to go into play? And that was part of why this is significant, at least financially, what we did get from this package. And so Ursula von der Leyen mentioned this 4.7 billion euro package. We knew a little bit about it going into the summit, but she continued to expand on it. Just specifically, what's important here is the commitment to helping South Africa with this just energy transition partnership. This has been something that a lot of other emerging market nations, South Africa, Indonesia, and a few others, had gotten commitments from developed nations to help them transition away from coal. The U.S. recently pulled back from that for South Africa. And so at least getting this financial commitment was seen as significant. Not just that, we also did hear about some other commitments to help with the production of vaccines. And so, I say all of this, Jumana, to say these are a lot of things that we can actually test and look at over time. And South Africa President Ramaphosa seemed committed and actually reassured by what he is hearing. But, we also do have a few goalposts, I guess is what I should call them, here in 2025. And that is, of course, South Africa's hosting the G20 presidency. Ursula von der Leyen will be here later this year. She talked about that, as will a number of other European leaders. So you can only expect that we'll continue to hear, or at least get questions about what the progress has been, and hopefully get some answers then.
Yeah, South Africa very much on the international radar this year, and of course on President Trump's as well. Jennifer Zabazaja, our Chief Africa correspondent in Johannesburg, will be back with you in 15 minutes. Well, coming up, is Dubai still the preferred safe haven for real estate investors? We asked Deloitte's Dunia Joulani. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, Dubai remains a preferred safe haven for investors despite geopolitical and economic headwinds. That is according to Deloitte, who released their Middle East Real Estate Predictions 2025 report. Joining us to go through the numbers right now is Dunia Joulani, infrastructure and real estate partner at Deloitte. It's always fun to talk about real estate trends in this part of the world. Set us up for 2025. It just feels like there have been so many underlying factors that have supported the huge jump that we've seen in house prices, residential, commercial, hospitality, namely on back of the huge population influx into Dubai and into the UAE. What does that look like for 2025?
I mean, look, for 2024, we saw an incredible a strong year across all real estate sectors, and really underpinned by and fueled by a number of areas, including Dubai's continued reputation as a safe haven for global investment. Like you said, a 5% growth in population, strong tourism arrivals, and unprecedented level of residential transactions. That's really very much expected to continue in 2025, maybe at a slower pace, but very much the same looking into the future.
Okay, so still bullish into 2025. Let me ask about specific segments. Hospitality, I thought, was quite interesting. 2024 average daily rate in Dubai was $188. Average occupancy rate of 78%. How does that compare to other cities in the region?
You know, what's incredible is from an ADR perspective, we saw a slight increase, an increase in occupancy similar from 77 to 78%, resulting in a 1% increase in RevPAR, or revenue per available room. While this may sound modest, it surpassed last year's levels, becoming really the highest RevPAR recorded over the last 6 years. This shows one of the highest RevPAR growths, not just in the region, but globally. ADR is not quite at the level of New York, London, and Rome, but occupancy is very much comparable to international markets, really reinstating Dubai as a strong tourism destination.
Yeah, and how much of that is centered around specific tourism events, specific events that are being held in Dubai to attract tourists?
This is really driven not just by events, but by continued investment into the tourism infrastructure, into the event space, like you mentioned. We can see in the Dubai Economic Agenda, D33, a very strong focus in increasing arrival numbers to 40 million. And contribution to GDP to 15%, up from about 12% at the moment. So very much continued investment into the tourism infrastructure in general in Dubai.
Okay, let's turn to residential, something that we all care about because we're all residents of Dubai. Sales prices up 20% in the last year. Similar amount for rental yields as well, rental prices, I should say. Yeah. Is that sustainable?
Look, that's a good question. A 20% increase in residential prices, again, fueled by a 5% increase in population, and also an influx of high net worth individuals, which has driven demand for the luxury segment as well. We really expect that to continue into 2025, albeit maybe at a slower pace near the end of the year, with an influx of residential supply and a launch of projects.
Yeah. Do you think that we're going to get to the point now where, or at some point in the next few years, where all of the new supply that's coming to the market, and you drive around Dubai and you can see construction everywhere, it's actually going to balance out the demand that's coming in?
Look, it's difficult to speculate and say exactly, but we've seen historically that Dubai as a residential market has proven to be very resilient and has struggled to keep up with the pace of demand from a residential perspective. So while we can't say exactly, growth continues to look positive and bullish from a residential
And on the commercial side, what are you seeing in terms of demand for commercial properties and the outlook for prices there too?
So very similar, a 17% increase in office prices, really driven by strong demand from multinational corporations. And despite a very competitive landscape regionally, Dubai tends to be very pro-business, and the investment from government has really reflected well from a commercial perspective. So prime locations like downtown and DIFC, we continue to see very, very strong demand. Secondary locations and suburban locations might struggle as companies implement a hybrid working space and more cost-effective strategies, but prime locations will continue to do really, really well. We see premium buildings like ICD Brookfield, for example, continuing to achieve above 95% in occupancy.
Yeah, that's the building right next door to us. Exactly. What do you think the biggest risk is to the Dubai real estate market?
Look, again, I think Dubai, from a real estate perspective, across all sectors, really has proven, in a climate with some uncertainty and some economic headwinds, has proven to be very, very resilient. And the government is very much focused on creating an environment that's positive for both residents and tourists. So we continue to be positive about the outlook for the markets.
Though slightly expensive, I would say. That's my opinion. Dunia, thank you so much. Good to have you on the show with us. Dunia Joulani, infrastructure and real estate partner at Deloitte. Well, plenty more ahead on Horizons. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. a southern African bloc is ending a joint military deployment to Eastern Democratic Republic of Congo, where its troops had been supporting the fight against rebels backed by neighboring Rwanda. These southern African development communities under-resourced troops have failed to hold back the advancing M23 rebels who seized 2 key cities earlier this year. Botswana's deal to acquire a stake in a Belgian gem trader proposed by the previous government but never completed appears to be in limbo. The plan for Botswana to purchase a 24% interest in HB Antwerp was seen as a model to challenge the nation's decades-long partnership with De Beers. HB Antwerp maintains the deal is definitely not abandoned. Bloomberg has learned Anglo-American is planning more job cuts at its corporate office. This as it restructures its business by selling assets and spinning off its platinum unit. We understand the company has sent notices to employees who are likely to be affected. All right, well, we are capping off what has been quite an eventful week for markets, and this is the picture for futures. So despite the risk-off sentiment that has prevailed for most of this week, futures look to be starting up the session with a more upbeat tone versus where we have traded the last couple of sessions. Yesterday, very notable, the S&P technically pulling back into correction territory, so down 10% now from its peak reached at the beginning of January. Lots of concerns around tariffs, counter-tariffs, said the impact that could have on U.S. growth. More and more people beginning to talk about the possibility of the U.S. entering into a recession. Anything from 10 to 30% is what some of the key names have been saying in that space. But then equally, it has been a decent week for European markets. European stocks futures seen opening up 0.4% today, and this on back of the optimism surrounding a potential truce between Russia and Ukraine. So don't forget, there was a major breakthrough this week in terms of the reconciliation. So that is something to watch. All right, coming up in the next hour of Horizons, BNP Paribas Wealth Management's Grace Tam joins the show with her market outlook. I'm Joanna Brisecci in Dubai. Stay with us as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The S&P 500 slides into a correction, bringing the benchmark's 3-week sell-off past 10%. But futures point to a rebound on signs the U.S. will avert a government shutdown. Putin's pushback. Russia's president warns any truce should lead to a long-term resolution of the war, saying there are issues he wants to discuss with the United States. Plus, data center dominance. Bloomberg learns a top Emirati official is to lobby Washington for more top-end chips as the UAE looks to become a regional lender in artificial intelligence. Well, good morning again. It's just gone 9 a.m. across the Emirates. I'm Joanna Brisecci in Dubai, yet making it towards the end of this, what has been quite a very busy week in terms of news flow, Jen.
Yeah, and I'm Jennifer Zabazaja in Johannesburg, where it's just gone at past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, as you were mentioning there's quite a bit of data that we got this week that we were parsing through. But then also you were just mentioning there what we're hearing from Russian President Vladimir Putin. A lot of developments, or at least news items to follow when it comes to geopolitics globally. So markets trying to digest a lot of that, I guess, this morning.
Yeah, it's just funny to cap off a week where the U.S. CPI data was perhaps the least relevant thing for U.S. investors this week, and just tells you about how much news there is swirling around. But yes, to your point, geopolitics at play, but then also tariffs. So once again, with the Trump administration threatening counter-tariffs of up to, I should say counter-tariffs at this point, of up to 200% on some of those European alcoholic beverage exports. So that was a bit of a surprise to the market, negative surprise to the market. You saw some of those key European stocks actually come under selling pressure. The euro also coming under selling pressure as well. But today, futures leaning towards the green. S&P up 0.8% despite the pullback that we had yesterday. Technically in correction now, down 10% from the highs. The euro also slipping a little bit on back of those counter-tariff proposals. So that has bucked the recent bullish trend as of late. Euro slipping about 8 basis points. Gold, take a look at where we're trading right now. Very close to $3,000. We are already at an all-time high, but getting very close to that psychological level of $3,000, a level that has never been reached before. And so tracking that very closely, money keeps pouring in to the safe haven there. And then Brent energy complex up 0.6%, this time on back of more geopolitical news with the U.S. administration tightening the sanctions on Iran and possibly also on Russia as well, and to exert some pressure on them to sign on to that ceasefire. Flipping over the board, though, and this is just one chart that I wanted to flag to you, which is the Trump tariff losers basket. And this is a basket that we've compiled with companies that are exposed to some of the tariffs that have been introduced on steel, aluminium, other sectors as well. And you can see that the basket is at its lowest level since Trump's inauguration, down almost 21%. And most of that actually has happened just in the last week or so as the rhetoric around tariffs has really been upped. So something to bear in mind that, again, tariffs are still very much front and center for these markets. And, well, more upsetting tariff news, especially on a Friday. President Trump has threatened to impose a 200% tariff on wine, champagne, and any alcoholic beverages from France and other countries in the European Union. The president posted on social media that he would go ahead with the duties if Brussels follows through with a tax on American whiskey exports, which was aimed at retaliating against Trump's steel and aluminium tariffs that went into effect on Wednesday.
The EU has just so many years treated us so harshly. They just can't stop. Look, their tariffs are way up here and our tariffs are down here. How about relax? Let us balance it. We are your largest, most important trading partner. Treat us with respect and let's get a little balance. And Donald Trump is out there saying balance, balance, balance. April 2nd, he's going to describe his balance. We're going to do it together.
The European Union's foreign policy chief, Kaja Kallas, told Bloomberg that the only side that's winning from a trade war between the U.S. and the EU is China.
We are not interested in trade wars. There are no winners in trade wars. Who is laughing on the side or looking at the side is China, who is really benefiting from, U.S. having a trade war with Europe. But it is also clear that if these tariffs are put on us, then we are also defending our interests.
Joining us is Grace Tam, Chief Investment Advisor at BNP Paribas Wealth Management, Hong Kong. Good morning to you, Grace. Well, let me pick up on the price action in the S&P yesterday. Technically now in correction, a pullback of 10% from the most recent peaks. Do you think we will get some support here, or is the downward trend going to continue?
Yeah, I think overall the market actually looks technically oversold in the short term, so we won't be surprised to see any kind of rebound. But the question is whether investors are going to sell into the rebound or actually buying on dips, and that's the big question. Especially for now, I think a lot of people actually worried whether there is still a Trump put, because as you know, for the Trump administrations, and they mentioned something like, we want short-term pain but long-term. The tone is like that, and so I think people doubt about whether there is still the previous term of Trump that we're going to see the Trump put, meaning that Trump is looking at the stock market and response to the stock market, but this time it seems it's not. Yeah, so I think in the short term we could still see a lot of volatility in the market, and any rebound people may use the rebound as a selling opportunities, as long as for the tariff policy is still a lot of uncertainty, and that kind of uncertainty is actually hurting the U.S. Growth momentum as well.
Are you recommending to clients to perhaps reduce some of their positions in risky assets, given the uncertainty that is prevailing and this uncertain environment for both businesses and also for individuals?
Yeah, we think we're actually recommending a lot of clients to diversify. Of course, over the past 2 years, a lot of focus is actually on the U.S. stock markets, especially the MAX 7. But with now, as we mentioned, the uncertainties actually getting higher, and there's also like more talks about whether there's going to be like recession risk in the U.S. We think that for the MAX 7 is already very crowded trade, and we may see some like trimming in terms of the position. But we warn our clients to diversify into other areas, for example, like China equities or even the European equities, because as you know, for this year we have like two potential game changers in those regions. For China is the DeepSeek, and for Europe is the potential reform in terms of the debt break, and meaning we could see more like fiscal stimulus in the coming future.
Grace, you also have a call to increase your positions in gold. We were just talking about we're continuing to see the metal hit new records. What is your expectation in the short term? Is this something you believe will continue to rise?
Yes, we're still very bullish on gold, given, there is still a lot of uncertainty, geopolitical tensions, etc. And our target for gold is actually 3,200. So we actually see every pullbacks in gold actually are really good buying opportunities, especially when you are seeing like data that a lot of the central banks, especially those emerging central banks, including China, they continue to see a lot of strategic buying in terms of gold.
You talked about gold, Grace. Let's end on Europe, because you also see an opportunity in Europe. As we know, the trade tariff tit for tat is ramping up between the U.S. and Europe. Where particularly are you seeing an opportunity right now to potentially buy the dip?
Yeah, we still see like the European equities like buy on dip story, because of course we may have news flows on tariffs, and that may see volatilities. But as I mentioned, this year we see a game changer, especially for Europe, the Germany's debt break reform. For now, we don't know. It's still in negotiations. We don't know what is going to pass from the parliaments, whether really we could see like lots of defense spending or infrastructure spending is going to pass. I think for now it's still in negotiation, but we think there could be some kind of like fiscal spending will be passed. And also like when we look at like in terms of like medium term, we do see like the loosening in terms of the debt break is actually a game changers for the whole region. So we do see any like negative news flows from the tariffs that send markets into like kind of volatilities, and that could be buying opportunities for the European equities market. Because especially for the medium term, as you know, valuations for European equities in general is still actually very reasonable, especially compared to the U.S. stock market.
Potentially bad news is good news there. We'll leave it there with you. Grace Tam, Chief Investment Advisor at BNP Paribas Wealth Management in Hong Kong. Grace, thanks so much for your time, and great to get your insights on. Also, U.S. Senate Democratic leader Chuck Schumer is dropping his threat to block a Republican spending bill. The move opens the way to avoid a U.S. government shutdown on Saturday. The two parties have been engaged in a standoff over the Democrats' insistence that a spending package includes some restraints on Elon Musk's federal cost-cutting crusade. Also, a San Francisco federal judge has ordered the Trump administration to rehire thousands of the government's newest employees who were terminated in February. The court found the Office of Personnel Management's order to fire probationary employees was illegal. The administration says it will appeal the ruling.
And Bloomberg has learned that a top Emirati official is to lobby Washington for more top-end chips as the UAE looks to become a regional leader in artificial intelligence. For more on this, Dan Akhresh, Bloomberg's UAE bureau chief, joins me now. So we published this article overnight, our colleagues in D.C., and according to our reporting, we think Sheikh Tahnoun is going to be flying to D.C. in the coming days to meet with some officials from the Trump administration. What is the background to this visit, Dana?
So Sheikh Tahnoun, who's also the deputy ruler of Abu Dhabi and the national security advisor, and of course has that sprawling network of companies that is valued at about $1.5 trillion. So a very, very significant visit by him at this time. The purpose of the plan, as we learned, is that he wants more or better access to advanced semiconductors to power the UAE's technology and AI ambition, and also to highlight UAE investment in the U.S. in terms of technology. And we saw with Stargate, MJX is actually part of these funding of Stargate, which is the AI infrastructure fund for the U.S. And we saw last year MJX is the UAE company, and it's also under Tahnoun. And we saw it investing with GIP, BlackRock, Microsoft, another AI infrastructure fund in there, and that was to build and invest in data centers mostly focused in the U.S. And of course, we know the UAE has this major ambition to become a regional powerhouse, and there is competition. Of course, Saudi Arabia has its own AI and technology investor under the PIF, so there is heavy competition here in the Gulf now, and the UAE wants to take advantage of course, its close relationship with the U.S. to get
what we didn't talk about is the fact that the U.S. has expressed its reservations over the UAE's ties to China. And there is a precedent to that because around G42, the Microsoft $1.5 billion investment into G42, one of the conditions was to divest their holdings in Huawei, which they did. So you've got to wonder whether there could be some friction in terms of UAE's own AI ambitions and where they want to get to versus the relationship that they value with the United States, and how closely they want to maintain those relationships, given they also have a relationship with China. So that's the triangle that we're talking about here.
Exactly, and I think UAE officials, especially the tech leaders, have made it very, very clear that they want and will only use U.S. technology here in this country. But they are agnostic about using Chinese technology in different sectors. But when it comes to that, it is just U.S. technology, and we've heard them say that over and over again. And I think that it might not test the relationship if Sheikh Tahnoun doesn't really get what he wants, which is easier access to the, let's say, NVIDIA chips for G42, and that's also the crown jewel of this tech ambition in the UAE. But there is a long-standing relationship here in the U.S. and the UAE, and we saw that with the Microsoft investment in G42. Geopolitically, also, we saw the top advisor to the president going to Iran to deliver a Trump letter, most probably about Iran's nuclear ambition here and what a threat that is to the likes of the UAE, Saudi Arabia, and Israel. So there is close ties, and I think what they're trying to do is establish and deepen those ties in different ways so that it is kind of like a wholesome relationship for them to get what they want and power those UAE AI ambitions.
Yeah. Interesting. And of course, the full story is up on the terminal today. Dana Khleish, Bloomberg's UAE Bureau Chief. Now, still ahead, one of Africa's largest banks says South Africa's budget approval is one of the biggest concerns for investors. We hear from Standard Bank CEO this hour. But up next, why President Putin has stopped short of endorsing an immediate ceasefire in Ukraine. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetti in Dubai. President Putin says he supports the idea of the U.S. brokered Ukraine truce deal, but wants to discuss the details with President Trump. But the U.S. president remains optimistic about the possibility of a ceasefire.
Yeah, I'd love to meet with him or talk to him, but we have to get it over with fast. If we get a peace treaty, a ceasefire treaty, I think that leads to peace. That's going to really lead to peace. I don't think anyone wants to go back. They've been doing this for a long time, and it's vicious and violent. And I think if President Putin agrees and does a ceasefire, I think we're going to be in very good shape to get it done.
Meanwhile, the U.S. has tightened sanctions on Russia by restricting payments for energy. Bloomberg's Russia economy and government editor Greg Sullivan joins us now. Greg, what do you make of President Putin's comments yesterday?
Well, there's a lot to unpack here, but clearly this was a message directed at President Trump. So far from the White House, we've seen a lot of one-sided pressure on the Ukrainian side and not on Russia. And Putin wants to keep Trump engaged and committed to his side. Obviously, what we know from Putin is that he's seeking to drag out the process to get a ceasefire, play for time, and get as many concessions, terms on his that are favorable to him as possible. Western analysts have told us they are seeking a maximalist approach to try to achieve that.
Yeah, and yesterday you were talking about the Kursk region, the fact that they've made significant gains, and perhaps they're looking to buy time there so as to call for full retreat of Ukrainian troops from Kursk, which would be a big concession on the Ukrainian part. But what pressure is the U.S. now applying on Russia to get this over the line?
Well, so far what we've seen publicly, at least, is a pretty one-sided approach. We have heard a few things from the U.S. Towards the Russian side. The Treasury Secretary Scott Bessent said that they are willing to apply maximal pressure. And of course, they let these licenses expire. It was sort of done quietly, no announcement, but it is expected to potentially gum up the works in the oil and gas revenue that the Kremlin receives. Still, alternative measures could have been already put in place, so it's unclear what the exact effect will be. But, we have heard Trump say that he's willing to apply more sanctions. So some pressure could be on the line, but publicly we've mostly seen a pretty one-sided
I thought it was
approach.
Interesting that when President Putin was speaking yesterday, he said, and this is a quote, "We need to talk to our American colleagues and partners about this." That sort of language would have been perhaps unheard of a couple of months ago. What does that tell us about the state of the relationship right now between President Trump and President Putin, or between U.S. and Russia?
Well, there's two things that I would say. One is that what we said earlier, this was clearly a message directed at Donald Trump. Putin was trying to speak directly to the president through the media, through his comments, keep him engaged. But two, as we've talked about before, this has been a monumental policy shift on the side of the U.S. They have gone from trying to isolate Russia to directly engaging them and talking about future economic cooperation, a complete about-face. And of course, the direct engagement between Trump and Putin himself. We are still expecting another call at some point. That remains to be seen, but quite a shift.
Yeah, it seems like President Putin was angling for it yesterday. He did mention that he wants to have a call with President Trump. So it remains to be seen what happens from here. Thank you. Bloomberg's Russia economy and government editor, Greg Sullivan. Now, still ahead, we hear from Africa's largest bank by assets on how South Africa's budget turmoil is impacting investors. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. This weekend, the new Formula One season gets underway in Melbourne with the Australian Grand Prix. It's not an easy sport for new teams to break into, but there's one tech CEO trying to do just that from a remote mountain base in New Zealand.
The scenery is stunning, and so are the cars that shatter the peace. There's no neighbours to complain about the noise here at Mount Lyford. This is where the CEO of ASX-listed Dicker Data set up Roden Cars, a very expensive passion project.
I wouldn't say building cars is necessarily the most profitable business in the world, even if you can be successful.
In 2005, Dicker bought a 1,300-acre farm here and, over time, built a test track and a garage with all the gadgets, including a 3D titanium printer and electrical engineering equipment. The F-Zero hypercar is one of the results. A 4-litre V10 engine, a top speed of 360 kilometres per hour, and a no-rules design philosophy. It looks like something Batman would own.
Well, on the F-Zero, we designed the whole car ourselves, basically. I designed the car completely from scratch. So there's, other than, electrical components and, brake systems and a few other bits and pieces, virtually everything on the car we made here.
Another of Roden's cars is the FZ, which looks more similar to a Formula One car. It was hoped Roden would be on the grid for this year's Formula One season, the first team ever from the Southern Hemisphere, turbocharging production and innovation at Roden's base. But the bid was unsuccessful, a failure that Dicker blames on Formula One politics.
They're not really interested in sporting teams, they're interested in big corporates that can use the sporting side of it as a marketing function. And that's not really sport.
Dicker is refusing to give up on his F1 dream. He admits it's unlikely, but then again, the entire rodent story so far has been unlikely. Paul Allen, Bloomberg.
Well, that was our fun Friday story for you. Let's take it back to markets. And this is how equity futures are shaping up as we head towards the open. S&P futures leaning towards the green, up 0.7%, though we did have a bit of a pullback yesterday, technically in correction territory now. The S&P ending the session down 1.4% lower, but a full 10% away from the most previous peak. Nasdaq 100 leaning towards the green as well, though tracking losses for the week too. And then European indices also in focus, leaning towards positive, up 0.5% around the optimism surrounding the potential ceasefire between Russia and Ukraine. Now, coming up, the EU says it is ready to support the reconstruction of Syria following a week of diplomacy and deadly sectarian violence. We'll discuss the latest developments in the country next. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. The S&P 500 slides into correction, bringing the benchmark's three-week sell-off past 10%. But futures point to a rebound on signs the U.S. will avert a government shutdown. Putin's pushback. Russia's president warns any truce should lead to a long-term resolution of the war, saying there are issues he wants to discuss with the United States. Plus, data center dominance. Bloomberg learns a top Emirati official is to lobby Washington for more top-end chips as the UAE looks to become a regional leader in artificial intelligence. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. And Jen, yesterday the focus for the markets was on the tariffs, the counter-tariffs, the counter tariffs. But we're trading positive today because apparently the shutdown was also a serious concern for some market participants.
Right. And it was, of course, a concern for a lot of leaders in the U.S. amid all of the other plethora of issues that they're dealing with there. So potentially a bit of positive sentiment for markets to at least start the day on Friday. We'll see how it pans out. But let's just take a look at exactly what you're talking about, Jumana, and how the markets are looking just ahead of the trading day. As Jumana was mentioning there, the U.S. did avert a government shutdown, potentially injecting some positivity into markets. At least if you take a look at U.S. equity futures, S&P futures right now, just below, just up just about 0.7% there, as you can see. But we did see on Thursday markets again getting a bit of whipsawing news as they have over the past few weeks. We did see the S&P closing down about 1.4%, the Nasdaq also closing in the red, and we did see correction territory for the S&P, so potentially welcome news there. Also extending into emerging market equities, at least right now, the index for emerging market equities up just over 0.7%, although we are hearing from many market participants that risk sentiment does remain a bit fragile right now. Gold right now just again inching up and up as we've been seeing new records there right now at just about $2,984.38 as it continues to move. We've seen the metal continue to rise as the flight to safe havens amid all of this uncertainty continues. We were just speaking to a guest earlier, Grace Tam, who said that her expectation is for it to continue to climb to about 3,200. And just finally finishing off on oil. Oil is up just about 0.6%, but still slightly above that $70 a barrel print. We started off the week talking about a lot of energy reports that were due this week, and I thought one of the most significant ones that we got was on Thursday from the IEA, again pointing to these trade tariffs as a reason for them to cut their demand outlook for 2025, and of course that amid OPEC plus production supply changes. And a really quick look at a terminal chart before we go, and that's on a new narrative that's forming in the markets. As we can see, stocks and bonds, their correlation has dipped again below zero, meaning they're going in the opposite way as this chart is showing. Our MLive team is trying to figure out, or they're posing the question about whether or not this correlation will actually pan out. A lot of it will depend on what we do see see from the Trump administration and how the price outlook changes from here. So that's just a quick look at what we've been seeing over the past few days. Jumana?
Thanks, Jen. Now, over in the region, Syria has made major steps towards quelling the tensions that erupted over the last weekend. But analysts quoted by AP say the country still has a long way to go and that the risks of sliding back into civil war remain. Joining us now is Sam Daghir, Bloomberg senior Middle East reporter. Sam, a lot has gone down in Syria in the last week. At the beginning of the week, we walked in and we were analyzing the sectarian clashes that took place along the coastal cities. Later on in the week, the transitional government came to some form of an agreement with the Kurds in the northeastern part of Syria. And now we know that he's put forward this temporary constitution. So how does this all piece together with the government's stated goal of creating some form of unity within the country?
Great. Good to be with you. I mean, certainly the events on the coast in western Syria have had a chilling effect on Ahmad al-Shara's efforts to unify the country, to heal the wounds, basically, of the post-Assad era, and to allay the fears of minorities in the countries. These are Alawites, people, co-religionists of the former President Bashar al-Assad, the Christians, the Druze, other minorities. So this has had a chilling effect because from what we understand from local monitoring group, it started out with an ambush against the forces of the new interim government presided over by al-Shara. But the response was quite brutal, and this is where Sunni residents and Sunni jihadists tied to the interim government started going around killing people who were mainly Alawites. So it has had a chilling effect. He's come out and said that he's going to do his best to make sure that this won't happen again, that those who committed violations would be punished. But he spoke in very broad terms, but he did put basically the whole blame on remnants of the old regime. And this will explain, I think, the move on the Constitution. It's not actually... It's being presented as the Constitution, basically. And under this new Constitution that was unveiled yesterday, the current transition period extends to 5 years. And the argument there that he really has a lot of work to do to stabilize the country.
Yeah. But external perceptions are very important. And I think the whole world is pretty shocked at the violence that flared up last weekend, the massacres even on those coastal cities. And it is interesting, though, to know that EU this week have also come out and said that they will pledge to help with the reconstruction efforts in Syria. Canada have appointed an ambassador and have talked about the easing of sanctions. And so despite what happened last weekend, things seem to be moving in the right direction for this government in terms of the relationships with the international community?
Yes and no. I mean, it's a little bit more complicated than that because obviously the Europeans have different interests in Syria than the Americans, completely different. And as President Trump keeps reminding us, there's a big ocean separating America from this part of the world. For the Europeans, it's first and foremost making sure that what happened in 2014, 15, 16, 17 does not repeat itself. If you remember the wave of people fleeing Syria and also the attacks on European soil that emanated from Syria. So they want to make sure that doesn't happen again. So obviously their engagement is going to be different. But I think for the game changer in terms of reconstruction in Syria, you need the U.S. to lift the current sanctions because these are sanctions on third parties. So anyone actually doing business with Syria could be in breach of these sanctions. And we saw with Qatar the announcement yesterday about supplying Syria with gas, natural gas through Jordan. The spokesperson for the Qatari foreign minister, Majid al-Ansari, was on Al Jazeera last night saying we had to get approval from the Trump administration for that. So that tells you how important the U.S. is in all this.
We've spoken in the past about the ties between the Turkish government and Ahmed al-Shara. Let me just ask you also about how you think Israel is thinking about all of these developments, because there was an attack that took place yesterday around the same time that Ahmed al-Shara was announcing the constitution on an apartment block targeting what Israel says are Islamic jihadist groups. How does that get factored into the equation?
Sure. I mean, before I talk about Israel, I'll just talk briefly about Turkey, if I may. So Turkey is basically the #1 backer of this government. I mean, yesterday, hours after he announced a new constitution, the foreign minister, the defense minister, the head of intelligence were in Damascus, right there. Hugs, very warm welcome by al-Shara. So they're really big backers. And in fact, this whole, I call it more like a detente between the Kurds and al-Shara. These are the Kurds who have been fighting, Turkey, and who have been backed by the Americans to fight, Daesh formerly. So this bodes well because al-Shara needs those Kurds. He can't afford to open a new front with them, and they sit on the resources, on the oil and gas that he needs, the hard currency that he needs, and they also know, the Kurds in Syria know that the Americans will leave soon. So it's very tactical. On Israel, it's a different situation. Israel is really sees the rulers in Damascus as basically, people who've just rebranded themselves, and they're former, Al-Qaeda people. They may say that they've severed their ties with Al-Qaeda, but they have no trust, and they've said that they won't allow any Syrian forces to be stationed south of Damascus. Hence, they've occupied parts of southern Syria, and they've conducted those strikes yesterday against what they've called command centers belonging to Islamic Jihad. This is a Palestinian militant group backed by Iran.
Yeah. Okay, Sam, thank you so much for the comprehensive overview of everything that's happened in Syria. It's been quite a big week, very eventful. Bloomberg's Sam Daher. Now, coming up, a budget approval by South Africa's unity government weighs heavily on investors. That is according to the CEO of Africa's largest bank by assets. We'll bring you that conversation next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The CEO of Standard Bank says budget approval by South Africa's unity government is one of the biggest concerns for investors in the country. The National Treasury proposed raising the value-added tax rate to 16%, but the Democratic Alliance wants more to be done to boost the economy. I spoke with Standard Bank CEO Sim Tshabalala.
The crux of what one sees in the budget is the commitment to a debt-to-GDP ratio and fiscal consolidation at 76.2% next year. That's the ultimate metric. As it happens, that is lower than what the ratings agencies expect. And so there is great commitment clearly from the South African fiscal authorities to deal appropriately with revenue and also costs. They've had to be very, very creative and careful in making sure that as they grow their revenue, they're focusing on value-added tax, which, as you know, is going to increase by 1%, 1 percentage point over the next 2 years. The choices they had, of course, were to increase corporate tax and individual tax, and they chose not to do that. For reasons that I think are rational and reasonable. Simultaneous with that, they will be focused on, expense management, the discipline of expense management, and all power to them as they do that. Do we think that they will meet those targets? Yes, there's every reason to believe that they will. The big question, of course, is will the budget pass? Will it be supported by the GNU? I don't know. We will see.
Well, and Sim, the big question that many people are wondering is, will the GNU, the coalition government, fall apart? That has big implications potentially for a number of folks. What is your take on that? Are you concerned about it?
We are human beings, so we're always concerned, but we are not pessimistic people. So we do analyses of the environment. We identify a base case, we pursue the base case, but we're ready for the bear as well as the bull case as it happens. The base case is that the GNU in South Africa remains and continues to operate. If you just look at its features, if you look at what has happened since the May elections, it's textbook coalition. After the ruling party loses an election, within a couple of weeks, it accepts defeat, enters into a coalition, hammers out the rules of the game, and pursues rational policies, including the acceleration of structural reforms, commits to Operation Vulindlela, which we need for GDP growth, and they get on with it. There's no reason to believe that they will not do the same in respect of the budget. I might just add, in the United States at the moment, people are having debates about what to do with their budget. We saw Germany, the coalition falling apart as a consequence of the failure to agree on a budget. So it's normal in a country that is democratic for these conflicts to happen. The evidence in South Africa is that the coalition will subsist.
That was Standard Bank CEO Sim Tshabalala speaking to us just after earnings from the bank. And for more stories like this from across the continent, don't miss our weekly Next Africa podcast available on the terminal and wherever you usually get your podcasts, plus our bi-weekly newsletter. Subscribe on Bloomberg.com/newsletters. And in some other stories we're following in the region, a southern African bloc is ending a joint military deployment to Eastern Democratic Republic of Congo, where its troops had been supporting the fight against rebels backed by neighboring Rwanda. The Southern African Development Community's under-resourced troops have failed to hold back the advancing M23 rebels, who seized 2 key cities earlier this year. Also, Botswana's deal to acquire a stake in a Belgian gem trader proposed by the previous government but never completed appears to be in limbo. The plan for Botswana to purchase a 24% interest in HB Antwerp was seen as a model to challenge the nation's decades-long partnership with De Beers. HB Antwerp maintains the deal is definitely not abandoned. Now, coming up, PwC's loss is rivals' gain. How consultancy companies in Saudi Arabia are capitalizing on the ban on PwC's work. Details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetti in Dubai. Consultancy firms in Saudi Arabia are capitalizing on the 1-year ban on PwC's advisory work. Bloomberg has learned that Deloitte and Ernst & Young have instructed staffers to prepare for more work in the kingdom. Bloomberg's Alex Duhler joins us for more. Alex, really good to have you with us. First of all, let's just take a step back and just remind us what exactly happened and what went down between PwC and the PIF.
Thanks for having me on, Jumana. So this is a really interesting story that basically Saudi Arabia's wealth fund has temporarily banned PwC from doing any kind of advisory or consulting services until February 2026. So the Saudi consulting market is absolutely huge and it's super important to PwC. So this news for PwC is pretty bad. It's going to be a big opportunity for folks like Deloitte and EY as to how they pick up those kind of contracts from PwC.
Yeah, so let's talk about what this actually does mean for those other big four firms. What are they looking to do to perhaps capitalize on PwC's pullback from that market?
Yes. Yeah, so we don't actually know the official reason for the ban. So PwC hasn't publicly commented on it. The PIF also hasn't said the reason why. So a lot of these big four consultancy companies are now sort of positioning to try and make inroads into that market because Saudi is a huge consulting market. Vision 2030 is this big plan from Saudi Arabia, and it includes NEOM and a lot of other big projects like that. So EY, Deloitte, they're sort of sending people over to Saudi Arabia and they're trying to get that share of the market. So it's going to be really interesting to see how it plays out and who gets what.
Yeah, I mean, you've got to wonder whether the way the work is being handed out is going to be more discerning. How easily can these firms actually compete for business within Saudi Arabia right now?
Yeah, so that's a really interesting question because it's not necessarily sure if there's the capacity for a few big four firms to pick up this huge bulk of work that PwC was doing. So EY, we've reported, has sent a number of managers to Saudi Arabia to try and pick up some of that work, but all eyes will definitely be on how quickly these big four firms can sort of absorb a lot of that capacity. So yeah, all eyes will definitely be on Saudi Arabia, and it goes without saying, but it's definitely a huge market. I mean, Saudi has huge ambitions with NEOM, with Alula, and looking at these big four firms, they're still going to be needed. So yeah, EY, Deloitte, they're all going to be jostling for that work.
Which is why it was such a high growth area for many of these advisory firms. Bloomberg's Alex Buehler, thank you so much for bringing us that report.
Now, the Russian economy has endured despite Moscow's war on Ukraine and years of Western sanctions. As President Trump warms up to his Russian counterpart, Bloomberg Originals looks at the strength of Russia's economy.
We've really witnessed a historic shift that has changed the world order. This was the first time a U.S. president had spoken with Putin since the invasion of 2022.
That phone call between US President Donald Trump and Russian leader Vladimir Putin shifted global alliances.
You're gambling with World War III.
Even with a ceasefire on the table, US military support for Ukraine and Europe as a whole is no longer assured. That means Europe's future ability to contain Russia has become less certain. But what is clear is that over a decade of sanctions have not worked.
Russia's economy has weathered the war and sanctions much better than many Western analysts forecast.
The world and G7 applied some of the harshest measures on Russia and still hasn't been able to deter it.
Despite restrictions, Russia's energy exports have continued to power its war machine.
Russia now produces around 10.4 million barrels a day. This puts Russia as the third largest producer of oil, just behind US and Saudi Arabia.
Before 2022, India imported about 1% of its oil from Russia. It's now importing anywhere from 35 to 40% of its oil from Russia. China has been a crucial conduit for Russia to import semiconductors and microelectronics that it needs for its precision-guided weaponry that's used to target Ukraine. If India and China had been following Western sanctions, Russia would have a much harder time sustaining the war.
The Russian government has been pumping huge sums of money into the economy, both to support defense production and to support businesses and sectors that have been affected by international sanctions. The military is now competing with the civilian sector for labor and for men to go to the front. And the only way for many civilian industries to compete with that is to increase their own salaries. That stokes demand to a level that the economy isn't really able to meet. The economy has been overheating in that regard.
Overheating means inflation, which spiked in 2022. Capital controls and interest rates managed it briefly, but since mid-2023, it's been on the rise. Despite these headwinds, Russia has a lot of fiscal space.
From the Kremlin's point of view, the economy isn't the primary concern right now. Putin's focused on achieving his goals in Ukraine and achieving his goals in confrontation with the West.
I think it's inevitable that we're going to be facing Cold War-style military spending. There's going to be competition for resources.
We have to remember that this is the biggest conflict in Europe since World War II.
The stakes are enormous. Look, no one wants to spend more on weapons, but this is the new reality we face.
And you can watch the full version of our weekly doc by our Bloomberg Originals team on the terminal, YouTube, and Bloomberg.com. All right, quick look at futures before we head out. Things are leaning towards the green, capping off a week of losses for the S&P. But that was it for our show. I'm Jumana Versace in Dubai with Jennifer Zabazaja in Johannesburg. Have a great weekend. This is Bloomberg.